What's up? It is Mitchell J, the Scaredy Cat Guide, and Bitcoin, I don't know, about to break down possibly. So, obviously, we know the price action is negative. It's been negative for several days now. If you look at the chart, we came down and basically kind of tested these lows, not the intraday lows, but got opening, closing, all this area is basically the last bottom, and and the nearest support. So it came down and tested it. Got this little reversal candle a couple days up, and then short-lived. We're down, and right now, as I do this video in the wee hours of technically Friday Eastern Standard Time, we are now testing this little low we made before we bounced. So the bottom line is, if we push through this, then most likely we are going to test these intraday lows here and touch 5,900, 6K area. It's a price point I've talked about often. When we got this little bounce, I thought maybe we weren't going to go there, but obviously, short-lived. So it's just been a slow grind. There's not a crap ton of volatility, and it looks like we're just grinding lower. Obviously, anything can happen. We could push up at any time on any kind of catalyst or any kind of, big buying program. But again, and we have this kind of like descending channel that we've fallen into now. Even with us breaking out of this long-term uptrend, you'll see like we had this prior high, and like it's just lower highs, which isn't good. Lower highs, not good. That constitutes a downward trend. So I'd be surprised if we don't push down to 6K, to be honest with you. But again, it's all probabilities. Anything can happen. So that is the downside target. Again, if anything good on the upside is going to happen, we need to get up to 8K first, and then see if we can establish back above this long-term trend line, and then maybe make a run again back at the 200-day moving average. But the bottom line is, this might have been just to work off some serious oversold conditions, in a lot of those secondary indicators, like stochastics and RSI and whatnot. And back to the downward grind. So obviously not what we want to see. If you are waiting in the wings to buy, then you're excited because you're, like I said, 5,900, even 6K, that's kind of your first target on the downside. And, if I was going to add any, well, to be honest, that's actually where I'm looking to add. I had sold some around here, just below 6,900, and I'm looking to add it back when we come down and test 5,900. Now, if we don't hold 5,900, if we get down there, then it gets fun. Then, we're looking at probably 54, 55, and then, yeah, let's just not even talk about that. Let's hope that we can hold essentially this bottom and just double bottom here. It looked like we were starting to double bottom already, but that's what's great about this. We still have plenty of room. So between this intraday low and even this bottom right here, you're looking at 5,900. So that is a downside risk. That is a downside target. I'm not doing anything until we get to that level, if we get there at all. So that's pretty much what's going on. I'm going to look at Litecoin real quick too, because Litecoin's been holding up. I feel like relative. I guess it's, it's the same thing. It came down, had this big spike bottom, came up, and now same thing. Got down there almost all the way sideways. So again, I guess Litecoin could come down and test these ultimate bottoms here around $100 or even 95, because you have essentially the pullback here at like 95 before it ripped, and then the tops here. So 95 to 100 is the downside price points for that. Obviously the upside, well, first this little top here, which 135, and then obviously go for the 200-day moving average at 146. So again, upside downside targets. Why do we want to? I don't. You know what? I don't want to call them targets. I want to call them price points, because we want to know our price point so we can act accordingly and we can set up proper risk reward scenarios. I'm going to say this in every single video. If you want to be successful actively trading or even managing just your portfolio or position trading, like risk reward, just think that. risk reward ratio. You want it to be in your favor, 2 to 1 or better, 3 to 1, 4 to 1. The bigger it is, the better. But the bottom line is, if your downside risk is not half of what your upside risk is, then you should not be doing it. And the bigger you can stretch that, the better. This is how all the great money managers make money, because the bottom line is you're not going to be right all the time. If you're right half the time, consider yourself awesome. So yeah, that's kind of it. I think Ethereum's kind of doing the same. Well, actually, Ethereum's not doing the same thing. We've talked about this in prior videos. It smacked below this support, which also happened to be, corresponding to prior trends, big triangle, and then it had finally broken out. So I left that trend line, and hey, look at that coincidence. Where did it run into, and where did it break down, and where did it try and bounce through and fail? Oh, both the support resistance line and this long-term trend line. Funny how that plays out sometimes. So downside on, Ethereum, ouch. We're looking at like 285, 290 as the next real support level. I mean, there's some little tops in here and some price action, so you could see it, but in the 340s or whatever. But bottom line, the next clear downside target is 285, 290. So with that being said, I'm not buying at 368. As far as the upside, we need to get above this resistance, this prior support, at around 405. So above 405 to have bullish price action, and then maybe it can make a run. Obviously, continued bearish price action, well, yeah, we're looking at downside, like I said, 285, 290. So those are the price points on Ethereum, and also the price points we can use to determine the price action, whether things are turning positive or negative. And so far, everything's quiet. I was watching CNBC earlier today. Their guy, well, actually, they have two crypto guys now, but he was talking about how he thinks after the tax deadline in the U.S. that you will see an uptick in crypto, because a lot of people are selling crypto to pay their crypto tax bill or just their tax bill, period. I can buy into that to an extent. I don't know how big of a factor that is, but we'll see. Maybe that'll give us some relief in about a week or so. I hope that's the case, because I'm tired of watching the crypto charts and the coins in the market just grind lower. So until then, and until the next video, and hopefully I'll be a little less amped up. It's so late, I'm so tired that I'm amped. But hopefully you understood my gibberish, and as always, I will put a link in the video notes to the ebook download for anyone that's completely a crypto newbie, and then also for the crypto class, where I teach a lot of what I'm talking about in these videos, especially the support and resistance points and how to recognize them. That is video 1. Alrighty, anyway, remember, make your own damn decisions. I don't know what your life is and what your risk tolerance is, so I'll catch you on the next video. Later.